Hey everyone, Dan here. We are just at the closing bell on Wednesday, April 28th. Today we're going to take a look at Mara, which is a Bitcoin mining company. So for all intents and purposes, it could be seen as a way to synthetically play Bitcoin and all the hype around Bitcoin, since the way that this company makes their money is by mining those coins, and then as the intrinsic value of that asset that they produce from their mining activities goes up, theoretically the price of the stock of the company should go up along with it. And that's basically what we've seen to this date. I would say I deviate a little bit from this opinion that it purely adulates with the price of Bitcoin, just in the sense of, Mara is a company as well. And so to the extent that the company itself is well run or poorly run, I think could give it some additional intrinsic upside or downside, depending on how profitable they can be with, the money that they make off of mining Bitcoin. So I think it's a little bit of a weird mixed bag, but I wouldn't completely ignore the company aspect of Mara. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And feel free to share these as well on Reddit or Twitter or Facebook or wherever you share things. That goes a long way. And let's get into it. So we're going to do this thing we've been doing so far this week, which is first taking a look at the macro chart, which in my case is the 3-month, 2-hour chart. That's about as far out as I go. And then we'll take a look at the micro at the 5-day, 5-minute chart and sort of see what each is telling us. This could help inform your decisions for investing, taking longer positions or longer swing trade positions versus day trading or short swing trade positions. I have a mix of both in Mara. I have both shorter term options that I do and longer term position that I've built over some time that for the time being I'm intending to hold, and I've had that for several months, I believe. So this is very self-serving, this video. Mara, just for folks who this isn't obvious by looking at the chart, which I think it should be, but Mara is prone to wild swings up and down, so it makes it incredibly useful for day or swing trading, especially in the options side. Just be careful if you get involved in options that you do your homework and you learn how to trade options, because you absolutely can take your account to zero and it can be very dangerous. So just know what you're doing if you're getting into options. But the benefit tomorrow's volatility is unmistaken. All right, so first we're going to do our charting and then we'll take a look at the indicators. So obviously Mara has had this huge run down. There's a couple of things that I know for certain about Mara at this point, since I've been keeping track of it for so long. Mara is both a channel builder. It builds and follows a lot of channels. It also exposes and fills gaps much more frequently than it does not, in my experience. So, what I've been saying on Mara for a while is it has this gap up to 38, which we see it interacting with right now. That's this one. And then I had said, and that leads us to a next gap that fills us all the way up to 51, which you see here. I guess that might stop just shy of 51. It has also exposed this additional gap, which is kind of cool, in the low 40s area. So it gives us a bit of a stepping stone from 38 into the low 40s and then into the low 50s. So looking pretty good in my opinion. But if you look back through the gaps in its history, you'll see that it tends to fill them and fill them relatively quickly. But that's why I say that for Mara. So, my main thing that I'm looking at right now, because it's not really in a channel on this longer term chart, I would be looking for it to fill those gaps. So the one obvious thing to be cautious of is there is this gap that brings it down to about 32. maybe mid 32s, which who knows if the price gets pushed down and there gets some selling pressure, what that could mean. But, it could push it lower than that. But I would expect it sometime in the near future to at least dip back down into the 32s. Could be a good dip buying opportunity depending on the other factors, of course. If we give ourselves a little space here, I would take a look at if you wanted to set some sort of like cautionary and stop loss areas. This seems like a no-brainer to me, this area for kind of like a cautionary zone, which in the case of Mara, just because it's such a unique thing, it's such like a unicorn of an entity, could also be a cautionary zone, but could also be a really good dip buy zone opportunity. Because I said dip buy, I turned that green. I meant to turn it red. But if you did want to think about like a more tight stop loss, that 29.14 area could be what you're looking for. If not, the 26 range could be a stop loss that could make sense, if you wanted to hold down there and see if it's going to bounce. In the meantime, there's obviously a ton of support right about here. That's one of our immediate levels of support. This one is our more immediate, this 35.89. And then if we look to the upside, basically the most important thing is for it to finish filling this gap, which will bring it up to the high 38s. And that's what I believe is happening. I've, said that all along. If you go back, if you go back and look through my previous videos on Mara, I've been calling out these gaps in particular, this 1 to 38 and then the 1 to 51 for quite a while. So, I would look for these ones for additional upper price targets if you wanted them. But again, my intention is to just basically follow these gaps. But I'm mostly trading the micro, the next chart that we'll look at for the meantime. But for anyone who is looking at sort of like more investing or longer term swing trading positioning, these are the levels that I'd look for. So because there's quite a few here, I know I've been saying this a lot in the videos lately, but I would select out a few and sort of match it to your risk reward level. So maybe you want to say, hey, if it dips below that gap toward the bottom, maybe you want to set a stop loss like mid 31s because you want to just sort of like hop out and take a better entry if you get a chance. And then maybe on the upside, you'll say, I'll trim my first position at 42 after it fills this gap, and then I'll trim my next one at 49 if it like actually comes up to fill this gap, and so on and so forth. So you could certainly choose any of these or all of these price targets on the upside if you want, but it becomes a lot of overhead essentially for you to keep up with in order to just maintain that position. So, if you need help with that, sort of thinking about that, I'm not trying to give anyone particular advice, but if you need help in sort of like just me clarifying what I was saying about selecting out a few of these price targets, feel free to leave a comment below or catch me on Twitter. I'll do my best to respond. But this is what I would see in the near future for the macro chart. Let's take a look at the indicators. Before I do that, pause it here if you want to take a look at this any further, take a snapshot if you want to, because I'm going to get rid of these lines so that we can clearly see our indicators. Looking first at our MAs, so we're still on the bearish side of things, which isn't a surprise. This was a really big fall from 28 down to, from 58 down to less than half that price. So that was a pretty big fall, but there's been all this bearish crossover recently. So the 12 crossing over the 20, the 12 and the 20 then crossing over the 50. So the next thing to be looking for would be that's the 12 and the 20 cross over the 180, which would bring us up toward 40 probably by the time it makes its way there. And then the 50 crossing over the 180, then everything will be in alignment like you saw over here. The 12 on top of the 20 on top of the 50, and the 50 on top of the 180. That is our bearish untangling, if you will. And like I talked about in last night's videos, one way to think about these MAs is like when they all sort of get tangled together, you can think of it like Bollinger Bands if you're familiar with that. So when they all get tangled together like this, it's like it's kind of coiling up and getting ready for its next big move. But you don't know if it's getting ready for a next big bullish move or a next big bearish move. But what you can look for is as it untangles. So as distance between these MAs starts to spread, which you would have seen here, you would have seen it spreading out in a bullish direction. So that could have been a strong indication to you that Mara is prone to big runs. And so there's often a lot of risk, there's a lot of reward to your risk. And if you can read the signals and the signs right, it can be very useful to you as you're building your account and growing your account. So as these untangle, they untangle in a bullish formation. That might be a good opportunity to take a buy position. And then on the opposite side, they were all tangling up here, getting all bunched up together. And then when it broke out, you saw the 180, I guess, wasn't all the way up there yet. So you could probably find a little bit better. And the 180 has just been so far behind. But you could look at a similar thing here where the 180 was coming up toward an already bunched group of MAs, and as they started to unravel, they very clearly all were running down toward the 180 in a bearish type unwinding, and could have been a good signal for you to sell out. Right, or take your profit or whatever your situation might be. On the MACD, for the macro, the bulls are still picking up momentum from what I can tell. On the histogram here, there's a still pretty solidly sharp upward move on the MACD. So that's all indications are that this green hill will grow nice and tall and will rival or will surpass this previous one here. So those are all good signs. No bearish divergence, obviously. And yeah, that's all looking pretty solid. The bearish has all but died down, obviously. And on the RSI, we are basically at overbought right now. So, just be careful. Obviously, you can spend a lot of time at overbought, as we see back here. Can spend a lot of time at oversold. So Mara, in my historical opinion, has not been a great follower of the RSI. It's been kind of like my least interesting indicator to use. My first one on Mara is always channels. My next one is gaps, or a combination of gaps and channels. Oftentimes channels will tell me like what's happening like in the very near future if it's in a channel, and gaps will tell me what is probably going to happen in the coming days and weeks, a little bit further down the road. And then the tangling and the untangling of the MAs has actually been an additional useful indicator for Mara. And then if I need to, I turn to the MACD and I basically ignore the RSI. So just full disclosure, that's my take on these Mara indicators. Okay, let's flip to the 5-day, 5-minute. Take a look. So I can tell you exactly what, because this is what I was playing today, was this channel here. It's a very obvious channel here, and it held it the entire day, which is pretty awesome. But I know we're not just talking about today, so let me go back to the 5 before I get too far ahead of myself. As you can see, there's these gaps here that we can expect will be filled sooner than later. So just don't be wildly surprised if there's a dip coming in a few days. That's just what Mara has always proven to do. I mean, always, like nothing is 100%, but it's been more likely than most to catch gaps and fill them. All right, so here's our 5-day upward channel. By the way, I'm not grabbing this gap because I'm going to assume that this was filled by this activity. It may not have been, in case this was low volume activity, especially in this pre-market hours, but I'm going to ignore it for now. So most important thing would be to play this channel on the 5-day, and the sub channel within this channel that I was talking about before that I was playing today, and I was playing it on the 5-minute. What existed here, like I said, stayed in this channel the entire day. It was pretty awesome. Made it pretty obvious where to get in, where to get out. And so that would be my like go-to. Like nothing wildly complex. Don't need a ton of price targets. It can be as simple as dip buy when MAR is at the bottom of the channel, especially if you have signals that it's holding, and then go ahead and take your profit if you want toward the top of the channel, and assume that it's going to come back down for a dip sooner than later. Yeah, I wouldn't complicate it any more than that. And if it comes down to fill this gap and or this gap, this one would push it out of the channel for sure. This one would put it maybe down just out of the channel, but I know I say this a lot, but for anyone new or anyone who is just helpful to hear things repeatedly, if it does fall out of the channel, that doesn't mean that the channel is inherently going to break. We did see it burst out of the top of the channel here, and that didn't mean that the channel was breaking, because you very quickly saw it come back toward the channel. So what you want to do is see how the distance between the nearest bound of the channel and the price action is interacting with each other. So if it comes out of the bottom of the channel and starts to move sideways, the distance between the bottom bound and the price action is increasing even though the price is moving sideways. That is a bad sign. That's a sign that it may not recover and get back into the channel, so you might want to take that as a stop loss opportunity. If it falls out and then very quickly starts coming back up toward the bottom of the channel, and it's not really increasing or decreasing distance between that bound, then you can sort of like continue to ride that wave, in my opinion, and let that price action move up as it maybe attempts to re-enter the channel. Okay, so let's not confuse ourselves with a bunch of price targets. I would just play it that way. So grab this snapshot if you want of the channel and of the gaps. Gonna delete it here and just grab a quick look at our MAs. A nice bullish setup here for the MAs, the 12, the 20, the 50, and the 180 in that alignment. So that's a good sign. The MACD, the bearish momentum is continuing to kind of hang on here, / pick up a little bit. So, I would be a little cautious of that. It's very high in the MACD here, and the high on the MACD is making lower highs right now, even though the price is moving up. So, I would look for a bit of a pushback here, which obviously we're seeing in the after hours right now. So I'm not sure how long it may last. Obviously, the MACD on the 2-hour was looking pretty solid. So those two things are going to conflict with each other at some point, and one of them is going to win out. But again, the channel and the gaps definitely supersede the MACD. So take it with a grain of salt. RSI, mid-range. So like I said, I'll show it to you just to show it to you because we do on every other stock, but I wouldn't pay it much mind in this situation. All right, I hope that was helpful. I hope some of you caught this today and sort of had some nice green action in your portfolio because of it. And, no matter what you were trading, I hope you had a great hump day and that you're getting ready to finish off the week strong. All right, well, thanks a bunch for watching. Thanks for sharing and liking, commenting, and subscribing. And I will see you in the next video.